Federal student loan changes and planning tools. Hello, and thank you for taking the time to review this important information. This presentation is intended to help students understand upcoming federal student loan changes, how those changes may affect future borrowing, and what tools are available to support financial planning. The information in this presentation is for general planning purposes only. It does not represent a final financial aid eligibility determination, and it does not guarantee future federal loan eligibility or funding. Individual eligibility depends on federal requirements, institutional records, enrollment history, program information, and each student's specific circumstances. As we move through the presentation, I'll also walk through two planning tools: the Determining Future Loan Eligibility Guide and the Gap Analysis Calculator. We will begin with a general update for new and continuing students. This section is intended for students who need a broad overview of the federal loan changes beginning July 1st, 2026. We will review the major changes, explain the concept of grandfathering, discuss the new loan limits, and then walk through the tools students can use to begin planning ahead. Key federal loan changes. Beginning July 1st, 2026, federal student loan rules are changing in several important ways. First, graduate plus loans will no longer be available for periods of study beginning on or after July 1st, 2026, unless a student qualifies under a temporary grandfathering provision. Second, new annual and aggregate borrowing limits will apply to graduate and professional students. Third, a new lifetime federal student loan limit of $257,500 will apply. These changes may affect how students plan for the remainder of their program costs, especially students who have relied on graduate plus loans or who have borrowed federal student loans across multiple programs or degree levels. Grandfathering basics. Grandfathering is a temporary federal transition provision. In general, a student may be considered for grandfathering if the student had a federal direct loan made before July 1st, 2026, was enrolled in the same academic program, remains continuously enrolled in that same program, maintains federal student aid eligibility, and is able to complete within that applicable grandfathering timeframe. That timeframe is limited to the lesser of 3 academic years or the student's remaining expected time to credential. It is very important to understand that grandfathering is not automatic. It is temporary, conditional, and time limited. It can also be affected by enrollment changes, program changes, gaps in enrollment, or other changes to a student's academic status. New loan limits. For students who are not eligible for grandfathering, new federal loan limits will apply beginning July 1st, 2026. Graduate students will have an annual direct unsubsidized loan limit of $20,500 and a graduate aggregate limit of $100,000. Professional students will have an annual direct unsubsidized loan limit of $50,000 and a professional aggregate limit of $200,000. All student borrowers will also be subject to a $257,500 lifetime federal student loan limit. The lifetime limit includes federal student loans borrowed at the undergraduate, graduate, and professional levels. It is important to remember that this lifetime limit is based on amounts originally borrowed, not simply what a student currently owes. Professional classification of instructional programs reference. Program classification matters because professional students and graduate students have different annual and aggregate loan limits under the new rules. A program is considered professional for federal student aid purposes only if it aligns with the appropriate professional program category and CIP code. This slide shows the General Professional Program CIP reference. Examples include veterinary medicine, law, theology and ministry programs, clinical psychology and related psychology fields, chiropractic, dentistry, medicine, osteopathic medicine, podiatric medicine, and optometry. If a program does not match an eligible professional CIP code, it is not considered a professional program for federal student aid purposes. That means the graduate student limits, rather than the professional student limits, may apply.
Determining future loan eligibility. Start by signing into studentaid.gov using your FAFSA credentials. Click on the login. Enter your email address or username. Enter your password. Use the two-step verification process to sign in. Review the disclosure. You must click Accept to be able to get to your dashboard. Once you're on your dashboard, click under My Loans and then click on Loans. This will bring you to the loan section where you will be able to review your total balance, your total principal balance, outstanding interest, and remaining paid. If you scroll down, you will be able to see information about your repayments and loans or other repayment programs that you may have signed up for. Scroll lower and you will be able to see an itemization of your loans, the status, your loan type, repayment progress, and additional information. When you click on View Loan at each of the rows, it will bring you to a page that will provide you with information on that particular loan type, your current balance, the principal amount, which is the amount that you will need in order to calculate when determining your future loan eligibility. This handout is available on your website, on your institution website under the Office of Financial Aid. In summary, students can begin reviewing their own federal loan history to understand possible remaining eligibility under the new $257,500 lifetime limit. Students should log into studentaid.gov and review their complete federal loan history. Students will need to identify the federal loans that count towards the lifetime limit, add the original borrowed amounts, and compare the total to the $257,500 lifetime limit. This is an important planning step because the lifetime limit is not based only on a student's current balance. It is based on the original amount borrowed, even if some loans have been repaid, forgiven, canceled, or discharged. To assist in your calculation, again, the Office of Financial Aid has developed a Determining Your Future Loan Eligibility calculator. The calculator will walk you through step-by-step navigating to studentaid.gov and identify the loans that count or don't count or should not count towards your limit. Once you have reviewed those loans, what you'll want to do is enter in those amounts into this section of the loan eligibility handout. For example, the subsidized loan amount of this particular student is $15,000 and the second subsidized loan amount is $8,000. This calculator will assist in determining the total of your subsidized amount and your total unsubsidized amount accordingly. Once entered into this section, for example, if there was an unsubsidized loan 3, within an amount of $10,250 in addition to what was noted here, the totals would be updated accordingly at the bottom, which will give you the total loan amount, for example, $115,000. What the handout will do will take the $257,500 lifetime loan limit, take the difference of that and your total loan borrowed to give you the remaining eligibility amount for the remainder of your program. Note that with the new regulation, additional loans are counted towards the $257,500 lifetime limit. Use the following table in the handout to determine which loans to count in your aggregate lifetime limits. Understand that the subsidized loan, unsubsidized loan, and graduate plus loans count towards your aggregate lifetime limits. Consolidated loans, parent plus loans, and private loans do not count towards your aggregate lifetime limit. Note that the original amount in each loan that was dispersed is what you want to include in your loan history, which is the principal amount. You include all applicable loans, even if they are paid off, forgiven, canceled, or discharged. The lifetime limit is based on amounts originally borrowed, not what you owe today. For example, a loan you repaid in full 10 years ago still counts towards your total. Add up your total borrowed and the calculated result. If your total is less than $257,500, that remaining eligibility would be how much you will have to complete your program. If your total equals $257,500, you have reached your lifetime cap and have no additional federal direct loan eligibility. If your total exceeds $257,500, you have exceeded the lifetime cap and no additional federal direct loan eligibility is available. Note for part-time students, if you are not enrolled in full-time, starting July 1, your loan eligibility may be reduced according to your degree of enrollment. This means that if you are three-quarter time or half-time, your loans will be adjusted accordingly. Also remember that enrollment less than half-time is not eligible to receive federal student loans. It is vital that you communicate any changes in enrollment that occur after the ag drop period concludes to your financial aid advisor. If you have further questions, please reach out to the Office of Financial Aid. Quick reference summary. Log in to studentaid.gov and view your complete federal loan history. Identify all subsidized, unsubsidized, and graduate plus loans. Use original amounts, including repaid, forgiven, discharged loans. Add up all qualifying loans to find your lifetime total borrowed. Subtract your total from 257,500 to find your remaining eligibility. And use this information along with other funding sources to decide if you can finance your program of interest. The gap analysis calculator walkthrough. The gap analysis calculator is another planning tool. This tool helps students estimate whether their expected aid and other funding sources may be enough to cover their estimated costs. Students can select their school, enter tuition per credit, enter the number of credits they expect to take per year, enter annual fees, and then enter expected aid. The calculator then estimates the potential funding gap by year and across the projected time frame. This tool does not determine eligibility and does not replace a financial aid review. It is meant to help students prepare for a more informed conversation with financial aid. And this tool can also be found on your school's website in the Office of Financial Aid's webpage. Remember that this guide is provided for general information purposes only and does not constitute financial aid advice or a guarantee of eligibility, funding, or outcomes. Financial aid programs, policies, and individual circumstances may vary. Students with questions regarding their specific financial aid circumstances should contact their financial aid advisor for individualized assistance and guidance. Step 1, select your school. If you do not know your program length information or your tuition and fees information, you may click on the links provided to you on the gap analysis calculator. For the purpose of this presentation, the tuition that is charged per credit for my program is $250. And the credits that I need per year, according to my academic advisor, is 27 credits per year. Note that this calculator also has tuition projections using an estimated average annual increase of 3%, but these are just estimates and actual costs may differ from year to year. If you have any questions, please contact the Office of Financial Aid or the Office of Student Accounts regarding your tuition. Once entered, the section under annual tuition and fees will be updated with your program tuition according to the projection of 3% year over year for the next 4 years. For the purpose of this example, the annual tuition and fees for my program is $1,250. Therefore, the estimated cost according to the calculator comes to $7,500 for the first year. Now we come to the expected aid per year. Remember, under your Determining Your Future Loan Eligibility handout, that you have calculated a remaining eligibility amount of $142,500. Also remember that aggregate and annual limits apply. For instance, if my program is a professional program, according to my program's CIP code, the amounts that I can borrow every year total is $50,000. If I was in a graduate program, the amount that I could borrow every year is $20,500. Therefore, in the gap analysis calculator, for the purpose of this example, I am a professional student that has $50,000 in an annual loan limit each year, with a remaining amount of $142,500. Therefore, my first year, I will be able to borrow up to $50,000. My second year, I will again be able to borrow up to $50,000, with my third year being eligible to borrow the remaining $42,500. Note that the estimated total amount, $142,500, must equal the $142,500 amount in your remaining eligibility in the or through the Determining Future Loan Eligibility handout. Notice that the first year of your cost is $7,500. Therefore, the total estimated aid that I have for the purpose of this example in year one is a lot more than my total estimated cost. What you'll want to do here is consider also your indirect costs, in that you will have to think about covering your room and board, your books and supplies, your transportation costs, and your personal costs. Once entered, what you will need to do is take a look at your estimated funding gap. As you can see, for the purpose of this example, my estimated gap is at a negative, and therefore I will not have a problem when it comes to my first, second, and third year program. However, because I will have reached my aggregate lifetime eligibility limit after my third year, I will have a funding gap on year four, and therefore will need to identify other sources of funding, such as scholarships and grants or private loans. We will discuss more about these other options in the next slide. The following section will also provide you information about the estimated payment plan amount, where each plan splits the annual gap evenly across the selected number of terms, then into equal payments per term. Please understand that regardless of the payment plan status, you must be aware that all balances due for a term must be paid within 90 days after the add drop period. The payment plan amounts indicated are estimates based on the calculated figures, but may not be accurate to the actual cost owed, and are just for example purposes. If you would like to learn more about our payment plans, please contact the Office of Student Accounts within the Student Financial Affairs Division. You will find their contact information on your school's webpage.
Funding options. If a funding gap remains, students may need to consider additional funding options. Those options may include scholarships, institutional aid, grants, VA benefits if eligible, federal work study if available and eligible, private or alternative loans, payment plans, employer tuition assistance, fellowships, assistantships, or out-of-pocket resources. The goal is to identify the gap as early as possible so students have time to review options before charges are due. Students should also be cautious about borrowing more than they need and should speak with financial aid if they have questions about how different funding sources may affect their aid package. Disclaimers and support. Before we move into the next section, I want to pause on a few important reminders. The information in this presentation is based on current understanding of federal changes. Federal implementation guidance may continue to evolve. The institution cannot guarantee continued federal loan eligibility. The Determining Future Loan Eligibility Guide and the Gap Analysis Calculator are planning tools only. They do not represent final eligibility determinations. Students should contact financial aid for individualized guidance and should speak with academic advising or the registrar before making enrollment or program changes.